the Financial Survival Network. Now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, we've got our good friend with us, Charles Nenner. You find him at charlesnenner.com. And Charles, you're going to be going over some charts here, explaining how these cycles exactly work, or maybe not how they work, but how you see them working in action, because nobody really knows how they work. First, Charles, inflation. All right, before we get to the charts, inflation kind of goes in cycles and waves. We're in an inflationary cycle now. Could go on for quite a while, couldn't it?
Well, as you look at this chart, it predicted the inflation going up and now the inflation going down. And that will bottom again where you see the cursor is on the left top. That is about the middle of February.
Right.
And like we're going over how cycles actually work. So the interesting thing is we don't really have to watch what happens in Ukraine, Russia, whatever the OPEC decides or whatever happens to the grain market. These cycles know in advance what's going to happen. And when we look at more cycles, we'll go a little bit more into what you can expect and how it really works as far as we can understand it. The thing is as if you look at this, you see instead of spending time of listening to all the stories, it's much better to do some work because the end result is much better. You know exactly what's going to happen and when it's going to happen.
Yeah, the charts don't lie, right?
Yeah, so here you see they have some low inflation until February next year.
Till February, which makes sense because no cycles head up in a straight line. Eventually they retrace, they go back and forth. But we're in this inflationary cycle for, you said yourself, could be the better part of a decade, right?
Yes. Yes.
It just doesn't go away.
Cycle's bottom.
And that's going to correspond probably with high energy prices and energy shortages, right?
And then also food prices, then everything goes up. Like prices are down, natural gas is down, crude oil is down, the whole complex is down, and then the whole complex starts going up again.
And nobody can figure it out. Everyone's shocked, right?
Well, they come with reasons, but if you look at the next chart, that is a weekly oats chart.
Yeah, dramatic chart, by the way. Huge.
Now, this is even more interesting because there are a lot of things that we don't know. We don't know about the weather. We don't know. But this weekly cycle knows what's going to happen. And when a cycle tops, like you show here, it goes down. And when it bottoms, it starts going up. And of course, there is a reason this one starts like the beginning of 2000. And I'm sure if we go backwards, then we can read why oat prices went up and down. The question is, what do we want to do in life? We want to have an explanation, or we like to know where the price is going. So if you're only interested in making money or know where prices are going, the only thing you need is to look at the cycle and how the computer program knows what the weather is going to be. I have no clue myself. I'm happy, but maybe in the coming years I can say something more about it.
Well, you know what they say: if you want certainty, get married, because your wife will definitely be certain about everything, right? Not to be a total chauvinist, but just a joke. So now we go to the Netherlands, Dow Jones Netherlands Stock Exchange.
Yeah, I just took some examples. You see here, this is the Dutch market. And you have the situation, when it tops, it tops. When it bottoms, it bottoms. Now, I think I once explained it, but I just want to explain it one more time. Let's say that you are long IBM and you bought it around $100, and IBM goes to $150, and now the results come out and they're great. Now, if the cycle is up, then IBM goes up, and then the Wall Street Journal will write, people poured into IBM, they're doing well. But when the cycle is going down, they still have great results, but now IBM goes down. So how do you explain it? Well, the next day, people to profit because they don't think next year will be better, which means is the cycle has to do with interpretation more than the facts themselves. So even if you know the facts, but you don't know what the interpretation is, or if the news is already in the market, it doesn't help you.
Yeah.
So this makes investing very low risk because you know exactly when it's going up and when it's going down.
And this, on the bottom here, the gold line that I'm highlighting, following with the cursor, that is what's the cycle period for this?
That's the cycle that I developed. We have two systems. We have here this on when the cycle bottoms, where you have now your mouse is the bottom,
right.
And you also see the top. And apart from this, I developed a system that can tell you also how high it's going and how low it's going. Also, that seems not intuitive, but if you can believe, if you see this, that we know when it's going to happen, then maybe you can also believe that we know at what level it's going to happen.
And it follows almost exactly. I mean, there's a couple of weeks here and there, but you can see it follows it.
No, this is not even a couple of weeks. This is a daily cycle, as you see in the bottom on the right.
Daily, right? Okay.
So it's off in the first, on the left, it's off only a couple of days. But if you would have reacted on it, it would still be okay.
Okay, interesting. And then multiple contracts, weekly cycle.
This is the corn price. This is another example that works very, very nicely, although we don't know what the weather is going to be, but we know what the corn price is going to do. So we have to rethink our approach totally, because then doesn't have anything to do with anything. It's an interesting problem that is more of a mystical problem, which I haven't solved yet.
Well, you might have to wait a while before you solve that one. And there, we're also seeing higher highs and higher lows, right?
Yeah, so you see here on the cursor, on the left top, it says 18th of March. So it says actually the weekly cycle. If you go up from here, you see the date. No, go up all the way to on the chart. There's the date,
right,
where the cursor is, and that's the date of the cursor. So actually the weekly cycles are bottoming only in the middle of March. Of course, we fine-tune it with the daily cycle, but you have an idea what to expect. So for people who grow corn, and we have people who do live cattle, cotton, you know, they're outperforming, because normally you have no idea what the corn price is going to do or what live cattle is going to do. So this is how we work supporting those people.
Yeah, well, this would be a great thing for people, farmers, people in any aspect of the commodity business, regardless, oil, nat gas, whatever it might be, really helpful for them. Can see that. And our next
now this is, as you saw the last 2 days, the S&P came down again. Why? Because again, this is a daily cycle. Look how easy it is. The daily cycle was stopping and went down again. Now, not too much has changed the last couple of weeks, only that the cycle went up. So the S&P went up and the cycle topped. And for the last 2 days, I think the Dow is down like 1,000 points for the last 2 days. Not for a special reason, just because, you know, the cycle is down. So you cannot really understand what's going on in markets, because whatever the media will tell you or whatever fundamentally, you know, doesn't have any influence. You only have to know where the cycle is.
And what's interesting, Charles, is when I started following your work, somebody told me, and maybe it was you, that basically the news does not create the cycle creates the news.
Right. That means is the Fed gonna be strict or not? Depends on how we feel at that moment, and how we feel is decided by the cycle. So the Fed doesn't even have to do anything, but already it influences the market based on the cycle and our interpretation of what the Fed is going to do.
Right. As far as energy prices right now, they're heading lower, right?
Right.
For how much longer?
Until the end of the year.
That's what I figured.
To be very specific, we have a sell signal from 88 with a target of just below 72, and the first short-term low is on the 16th of December, but the better low is by the end of December. Now, whoever is not familiar with our work will lock me up if I start talking like this, but you know, you have to get used to it and see there's a value to it.
Yeah. So one thing, like in Europe, with the nat gas situation, very dire, you know, because of the war and also because of lack of investment in alternative sources to Russian natural gas. The cycle, basically the charts have been calling for this for quite some time. I remember talking to you about it last year, really before the war started, and you told me nat gas was going higher, and you also made a bold prediction that the discount of nat gas to oil would be eradicated. And it hasn't happened in the US yet, but it's certainly happened in Europe. It's nat gas is trading at a huge premium per BTU to what you would get from oil.
Yeah.
So the charts really delivered there.
So the charts I sent you, and what I want to show is that usually, like in this chart we have on the screen, the Goldman Sachs Commodity Index is a total of maybe 20 cycles, and you see they're really fine-tuning because they take into account all kinds of cycles. The other one was only one cycle, which I call the dominant cycle, and all these other things, just to show that there is really a pattern over here that's easier to see than the one on the commodity index. So if you have tops to top to top, the same amount of weeks, again, it's very hard to explain why that works. We're happy that it works. It already works since the middle of the 80s. Yeah. It's just that I remember my time at Goldman Sachs, that people who come from an economic background say, as long as I don't understand it, I'm not going to use it. And what I say is, I come from a medical background, and if I have to give you a red pill that helps, even if you don't know how it works, I will give you the red pill. So for me, it's easier. I'm trained differently than economists.
Mm-hmm. A more scientific slant towards things. So we got daily cycles, weekly, monthly, yearly, decade cycles. Which ones are the most important?
Yearly cycle is the most I have, because you really need 50 years of cycles to make a yearly cycle. So I got my war cycles. They have a 100-year cycle, but in financial markets, the yearly cycle is the longest I have.
So as far as the war cycle goes, and I've heard a number of cycle-oriented analysts refer to it, we're like really in the thick of that war cycle, aren't we?
Yeah, and we have a new cycle turning up the middle of next year. And actually, if you want to make a story, you can make a story, say, listen, things are quiet because Russia is running out of arms, but once the oil price starts going up again next year, they have more money, and then maybe they get organized again and they can continue the war on a higher level. I think there's much more going on. I'm very much seeing pacts being organized, and I think Iran is gonna do something against Saudi Arabia, North Korea against South Korea, China against Taiwan, Russia against the NATO. And if it all happens at the same time, I don't think the United States will interfere, because they cannot spread out their forces that much, and there's nothing they can do. So I think when the next cycles are turning up, we got this big problem on our hands.
And when is that due for? Next year?
It starts the middle of next year.
Middle of next year. I'm going to mark that on my calendar, Charles, and we're going to have a talk about it middle of next year. Yeah, we don't even. So it's just a cycle. That's all we can say about war, or is it tied to other cycles that kind of become a predictor of the war cycle?
No, I give you an example. If people want to check it out, there's a very dominant 100-year cycle that says in every second decade of a new century, the new war starts. So let's say that is now. That's why 10, 15 years ago, I said in the second decade of the new century is going to be dangerous. If you go back 100 years, then you get in the time of the First World War, which ended with the Second World War. If you go back 100 years, they get to the Napoleon Wars. If you go 100 years back, you get to the Habsburg Wars. And if you Google, just for fun, major wars in the beginning of new
centuries there. Yeah.
Century, you see it for thousands of years. It always happens. Now, why every 100 years? There are cycles that used to be 60 years, like the Kondratyev cycle and that cycle. And the idea was, well, people live 60 years and they forget what happened before. So the same situation returns. This is a bit longer, so I don't know in the year 500, 600, 700, 800, when people lived only 30 years, you didn't have to wait for 100 years in order to forget what happened. And then, as I think I mentioned it once, how things come back, I often mention it, but it's really so interesting. So when Rome was burning, then the Senate had big discussions if angels are female or male. And now we have the same situation. I think the world is burning and we're busy with deciding who is male, who is trans, who's this, who's that. It's so interesting. So history totally comes back as we know it.
And, you know, we don't even have a good violin player in DC here to fiddle while Rome burns, right?
Yeah, but he will come up.
This is a crazy world. So this is going to have a profound effect on gold and oil and all energy, right?
Well, it's not, you cannot combine that. I don't combine and try to make interpretation because, for instance, there is a war that could have been more serious than it is now. There is a lot of inflation, but gold is not moving simply because cycles are not up yet. It's very interesting. If cycles will be up, it will be going to the roof already. So you cannot combine it with the news that's coming up, as we've seen now. So we have to look at everything separate.
And the last time we spoke, we looked at the gold chart, and
right.
Basically it was going to be subdued till the end of the year, and then I guess at the end of the first quarter we talked about, I think that's where it was going to go up.
Yeah, different cycles start bottoming by the end of the year.
Mm-hmm. So, and then we get the first quarter seasonal boost in precious metals. Is that what we're thinking of?
Well, next time we talk, I'll show you the gold charts again.
Right.
The different up and downs. Like now, we're just praying the up and downs. They're still worthwhile doing. It's like $100 up, $100 down.
Yeah.
But I warn everybody every time, this is still not the start of a bull market because weekly cycles have not bottomed yet.
Right. We can see that. But silver, though, is looking a lot stronger than gold, isn't it?
Yeah, silver cycles are outperforming, although silver now cycles are also turning down this week. So we saw high for the moment, but they look better than gold.
Yeah, they do. And it's been relative strength, all those measures. Silver has been outperforming gold, and nobody can figure it out, right? But the
maybe some people can figure it out. Just I don't know them.
It's all the cycles, though. The point is, and the cycles are diverging, because we've gotten a lot of questions on that on the YouTube channel. Why is gold lagging behind silver? Shouldn't it be leading? And hey, I don't know the answer, but it's in the cycles.
You're right. Some cycles turned up before other cycles. So if the silver cycles are more positive than gold cycles, silver outperforms until it turns around again. But again, it's much better to study these patterns than to try to understand why things happen, because it could be true, could not be true. We're not sure.
So here's a question for you. I'm going to end the screen share. Are the cycles rational, or are they just are?
Or are they just what?
The cycles, are they rational, or do they just occur naturally?
It's naturally. If you want to know more about it, you can Google my name, Charles Nenner, and then Charles Nenner sunspot theory, because the sunspots have a certain magnetic field over here on the Earth, and that works with crystallization of water. And as I explained, our brains is 80% water, so we think we have this free will, which we don't have. So if you go, for instance, to the website of the NASA, and they have a prediction ahead 1, 2, 3 weeks what the intensity of the sunspots is, and you do an overlay of the Dow Jones, it's like very close. So it's really, the cycles show the interpretation that we make of the facts, and there's a physical component, which is the crystallization of water, which depends on the intensity of the sunspots. So there's much more to it.
Mm-hmm. It is fascinating. We really appreciate you coming on. Hey, go over to charlesnenner.com. You can get a free trial of Charles' service. I highly recommend it. Been following Charles's work for over a decade now, Charles. And hey, it's not perfect, but it's about the best we have. And in the end, it seems to prove out. So if you've got a question for Charles, shoot me an email, kl@kerrylutz.com. And if you're at the website, financialsurvivalnetwork.com, make sure you sign up for your free newsletter. If you send me an email with the subject Nenner charts, I will send you these charts with Charles's blessing. And hey, Charles, you enjoy the holidays here. Happy Hanukkah and Happy New Year. And we'll talk to you in 2023.
Okay, be well.